Welcome to the deep dive. Today, we're digging into something that's really got people talking. Alphabet's upcoming Q2 earnings.
That's right. NASDAQ, GUGL.
Yeah, and you might think, well, what's left to say? This company is everywhere, right? They've, built the table, owned the house.
And run the neighborhood association, as the saying goes.
Exactly. But we're here to cut through that noise because, well, industry whispers are suggesting a really surprisingly strong quarter, maybe even jaw-dropping.
Mm-hmm. And we're drawing heavily from a pretty insightful analysis by Tony Hicks. It's titled Alphabet, Arrows Point to Jaw-Dropping Second Quarter, published just recently, June 23rd, 2025.
Right.
And it gives 10, pretty compelling reasons for this optimism.
Which is interesting because, Wall Street's jittery, the Fed's always twitchy these days, consumers are watching their budgets.
Yeah, the macro environment isn't exactly booming.
But Alphabet seems ready to, drop a flex on the market. So what are these clues, these catalysts? What's pointing to such a strong Q2 for them?
Well, there are quite a few angles to look at.
Okay, let's unpack the first one then. AI revenue. It's supposed to be showing measurable muscle now, moving beyond just cool demos.
Right.
But turning AI buzz into actual dollars can be tricky. What makes the analysis confident this time? Is it really past the gee whiz phase?
Yeah, I think it is. And the key thing here is how these AI integrations are actually creating, concrete, measurable revenue streams, things that just weren't there or weren't significant, say, a year ago.
Okay.
So two main areas. First, Google Cloud. It used to be seen as maybe the third wheel, but it's getting this, the analysis calls it a steroid injection from Vertex AI and Gemini integrations.
Vertex AI, that's the platform for businesses to build their own AI stuff.
Exactly. Build and deploy custom AI. And Gemini is the powerful model they can use. So together, it's like this AI-forward enterprise toolkit.
Gotcha.
And it's landing big contracts. Healthcare, finance, government agencies.
Yeah.
They're signing up. We saw cloud revenue surging back in Q1. And Q2 is expected to accelerate that because businesses are moving past just trying it out, the pilot projects, into full deployment.
Okay, so that's the big enterprise play in cloud. But you mentioned two areas. What about bringing AI into the everyday tools we use?
Right, that's the second piece, and it's maybe even more pervasive. Gemini embedded directly into Google Workspace.
Ah, so Gmail, Docs, Sheets.
Exactly. The analysis calls it Alphabet's Trojan horse. Because now, corporate clients aren't just paying for basic productivity apps anymore.
They're paying for intelligence.
Precisely. Features that automate things, summarize emails or docs, help write stuff. And crucially, these upgrades aren't free.
Right.
It establishes this whole new recurring revenue stream through different tiers of AI subscriptions within Workspace.
Interesting. Okay, so AI is becoming a real revenue engine. Now let's pivot, maybe from the boardroom to the living room. YouTube.
Ah, YouTube.
It just keeps going, doesn't it? The analysis calls it a Rockefeller of video platforms. How is it cementing that status when other platforms seem to be, struggling a bit?
Yeah, YouTube's strategy is really paying off. It's
Yeah.
not just surviving, it's set up for real expansion. Two big pillars here.
Okay.
First, Shorts monetization. It's finally working, really working.
It was a bit of a question mark for a while, right? We hope this works.
Totally. But
Yeah.
now, the source calls it a money printing machine. Look at the payouts to creators last quarter record highs.
Oh.
That's not charity.
Huh.
It's proof they figured out how to target ads effectively in that short format, built a sustainable model. It really counters TikTok and makes YouTube, comprehensive.
So shorts are actually contributing properly now. What's the other pillar? You mentioned the TV pivot.
Yeah, the TV pivot, basically streaming on steroids. YouTube TV continues to grow, and that NFL Sunday ticket deal, it's paying off.
How so? Just subscriptions?
Well, yes, direct subscription revenue is big, but it's also about ecosystem stickiness. It keeps eyeballs glued to Google's world.
Right.
The analysis describes YouTube as a cable killer, a sports broadcaster, and an advertising titan all rolled into one.
That's quite a combination.
And think about Q2 timing it. It covers the bulk of the NBA playoffs, early MLB season. Viewership expected to surge.
And ad revenue follows the eyeballs.
Exactly.
Okay, makes sense. Now, search. Every year someone says, search is dead, or AI will kill search.
Duckles. Yeah, that old chestnut.
But Alphabet's revenue chart just keeps climbing like a ski slope in reverse. It seems boringly consistent, which might actually be its strength. What's keeping search so dominant?
Well, it does raise that question, doesn't it? Can something be boring if it delivers so much value consistently. A key development is SGE, Search Generative Experience.
Right, the AI answers directly in search results.
Now, it's not fully rolled out everywhere, and there's
Yeah.
been some, controversy, but Alphabet's being super careful here,
Careful meaning.
meaning not cannibalizing its ad empire. That's priority number one.
Ah,
So the limited rollouts, like in the US and India, are actually showing increased engagement time and better ad relevance.
which means they can charge more for ads.
Higher ad premiums, exactly. So the AI integration, done carefully, actually boosts the core business.
Interesting. So it's not killing ads, it's potentially enhancing them. What about like broader economic stuff?
Yeah, there's a macro boost too. Travel is back post-COVID, and that means lots of search ad spending.
Hmm.
And the finance sector is spending heavily on customer acquisition.
So more competition in the ad auctions.
Definitely. More aggressive bids, especially from travel sites, fintech platforms. It all feeds into that consistent growth for search.
Okay, got it. Let's switch gears again.
Yep.
Enjoyed. We're hearing Pixel sales are doing better, licensing is steady. Feels like Android's quietly becoming a real profit center.
Yeah, what's interesting here is how different bits of the Android ecosystem are all contributing, sometimes under the radar. Pixel sales, for instance. They're not just a sideshow anymore.
Really?
Yeah, gaining market share, especially in high-margin regions, partly because competitors like Samsung and Huawei have faced their own issues. Plus, there's apparently strong buzz for the Pixel Fold 2, the foldable phone, which is expected right after Q2 ends. That anticipation might already be driving some upgrade activity.
Okay, so hardware momentum. What about the software side, the Play Store?
The Play Store is, as the analysis puts it, quietly dominating,
How so?
benefiting from the surge in mobile gaming subscription apps. And Google's also been, let's say, successfully navigating legal challenges and renegotiating its cut from transactions.
Ah, the commission fees.
Right, in ways the source calls alphabetically profitable. Right. So yeah, add it all up, and Android is looking pretty strong financially.
Right. Now, I remember Sundar Pichai talking about a durable cost structure a while back. Seemed like standard CEO talk then.
Efficiency drives.
But the analysis says it's like gospel now at Alphabet. How is that translating into actual savings or efficiency? Is it real?
It really seems to be. And it shows a certain maturity, managing such a huge company. Proving growth doesn't have to mean constantly ballooning costs.
Okay.
Well, first, headcount. Alphabet is actually leaner than it's been in ages.
Fewer employees? But
Right.
are they doing less?
Apparently not.
Hmm.
Productivity metrics are reportedly up. The thinking is they've shed some of the more experimental, underperforming moonshots.
Right.
And really refocused teams around the core moneymakers. Search, cloud, YouTube, and AI.
Makes sense. Streamlining. Is AI helping internally too?
Oh, definitely. They're eating their own dog food, as the saying goes,
Yeah.
using Gemini internally for all sorts of things.
Like what?
Reducing code review times for engineers, helping with marketing planning, stuff like that.
Yeah.
It leads to real margin improvement through better operations, not just more sales.
Okay, interesting. Let's talk regulation. The DOJ lawsuits, EU fines. It feels like the regulatory music never stops for Google.
It certainly doesn't.
But the source suggests there's no immediate death blow in sight. Why not? Aren't these antitrust cases a huge threat?
They are a threat, long term. But the analysis highlights Google's resilient and, frankly, the slow pace of these things. Take the US DOJ trial. Closing arguments happened earlier this year.
Right.
But a decision. Months away. Minimal. And then appeals could take years. And critically, during all this, the revenue keeps flowing. Those big distribution deals, like with Apple for search placement, still intact.
So, the legal wheels grind slowly, and business continues for now. What about Europe? The Digital Markets Act, the DMA.
Yeah, the DMA is a big deal, forcing changes around self-preferencing,
Right.
favoring their own services.
Right.
And Alphabet, as the source puts it, bending, not breaking. They're making tweaks, opening up data access a bit. But crucially,
It hasn't hurt usage.
exactly, user engagement seems fine. And Q2 might even show European revenue holding up or slightly increasing, maybe helped by a weaker euro and improving conditions there.
So, managing the regulatory hurdles for now. Okay, next point. Capital allocation. Alphabet makes a ton of money, but they're also giving a lot back to shareholders, right? This buyback bonanza.
Yes, absolutely. And this goes beyond just growth. It's about actively managing their financial structure to boost investor value. They have this massive $70 billion buyback plan.
$70 billion. Wow.
Yeah, huge. And it's in full swing now. Q2 is expected to show record buyback activity, partly because they likely bought aggressively during that tech dip back in April.
And fewer shares means earnings per share look better.
Exactly. Share count shrinks, EPS gets inflated. It can lead to a surprise earnings beat, even if revenue growth is just, pretty good.
Clever. And they have the cash to do this comfortably.
Oh, yeah. No debt panic here. They got a cash war chest over $100 billion. That gives them massive flexibility. More buybacks, maybe some strategic acquisitions, and this is speculation for maybe 2026, potentially even starting a dividend, setting the stage for more shareholder-friendly moves.
Right. Okay, number 8. This one's juicy. The Apple rumors. The elephant-sized AI whisper about Google's Gemini potentially powering stuff on iPhones.
Chuckles. Yeah, this one gets a lot of attention.
How big could that actually be for Alphabet?
Potentially massive. And it shows how intertwined even these giants can be. Multiple reports suggest Apple might let Gemini handle some generative AI tasks in Safari and Siri for iOS 18.
If that happens.
If it's announced officially, say in Q3, the direct revenue impact could be enormous. But even now, in Q2, the anticipation of that deal.
Just the possibility.
Yeah, it likely boosts Alphabet's own confidence, maybe influences negotiations elsewhere. It's a factor already.
And beyond the direct money, what about the brand halo effect the source mentions?
Right. A formal Google-Apple AI partnership would be a huge validation. It would really solidify Alphabet's position as the go-to AI provider, not just for consumers, but for enterprises too.
So it lists the perception of Gemini across the board.
Exactly. That halo effect could benefit cloud, YouTube ad targeting, builds trust everywhere.
Okay, fascinating possibility. Number 9, sentiment. The analysis says Wall Street has been kind of lukewarm on Alphabet despite good signs.
Yeah, surprisingly so.
And that this is actually an advantage. It sets the bar low enough for Alphabet to dunk over it. How does low sentiment help?
Well, it's a classic setup, really. Subdued expectations meeting potentially strong performance. That often leads to upside surprises.
Because analysts haven't raised their forecasts enough.
Precisely. Despite a strong Q1, many analysts were slow to upgrade Q2 expectations. That creates room for Alphabet to deliver a clean beat on both revenue and earnings.
Okay. What about individual investors? Retail.
Also relevant. Alphabet is still relatively underowned by retail compared to, say, Apple, Nvidia, Tesla.
Really?
Yeah. So if Q2 results do impress and spark a rally, you could see money rotating out of maybe more speculative AI plays into Alphabet, a mega cap with strong fundamentals. That could push the stock higher.
Interesting dynamic. Okay, finally, number 10, valuation. All this good news. Is the stock still reasonably priced? Or are we paying filet mignon prices for spam, as the saying goes?
Laughs.
Yeah.
Good question. Is this still a relative bargain?
Is it?
The analysis argues yes. As of late June, it was trading around 22 times forward earnings.
How does that compare?
That's actually a discount to both Microsoft and Amazon, even though Alphabet is projected to have faster earnings growth.
Faster growth, but lower multiple.
Yeah. And the PEG ratio, price earnings to growth, looks even better because of that projected 15-20% earnings growth rate over the next few years.
So the numbers suggest it's not overvalued, maybe even undervalued relative to peers and its growth.
That's the argument. And if Q2 really confirms this acceleration, the cost savings, the AI monetization, you could see that valuation multiple expand by year end.
Because the market will catch up.
The market doesn't like being behind the curve, especially on a potential trillion-dollar grower. So yeah, the current valuation might not fully reflect everything we've just talked about.
Okay, so wrapping it all up, the core message seems pretty clear. Alphabet isn't just, getting through this tricky economic period.
No, it seems to be soaring above it.
Right. The signs are pointing up across the board, YouTube Shorts, Workspace AI, maybe that Apple deal.
Absolutely. It's not just that they're embedded in everything we do. They're proving they can monetize AI effectively, keep search fresh, scale media, and manage costs, and return cash to shareholders. It's a powerful combination.
It really is. So as we look at Alphabet potentially delivering this monster second quarter, maybe the final thought for you listening is, what does this tell us about the future of these tech giants? Could this performance redefine what dominance even looks like in this new AI-driven world?
A big question to ponder.
Definitely something to think about. We'll leave it there for this deep dive.